He has finally breached the crucial 80 mark against the dollar. The Indian currency slipped to 80.06 in trade today before recovering 10 paise to close at 79.96. The fall in the rupee is on the back of continued selling by foreign institutional investors. The rupee is also under pressure and continues to be so over the last few weeks due to high crude oil prices.
For the tens of thousands of students headed out to colleges in the US in August, the timing could not have been worse. Not only have prices of air tickets zoomed in the past few months, their fee has also shot up considerably since they applied, probably nearly a year ago. The overall annual expenditure at a good college in the US is around $50,000 a year. For families paying this fee a year ago, it meant an outgo of 37,30,000 rupees. Now they have to shell out 40 lakh rupees. For the rupee, which has been on a decline against the dollar, the fall has been particularly steep in the past 1 year. Nearly 5.5 rupees compared to 16 rupee fall over the past 5 years and 25 rupees over the past 10 years.
So why is the Indian rupee falling so rapidly? The answer lies in the fact that interest rates have been hiked in the United States, making the dollar a very attractive option for investors. We are seeing that investors across the world are now pulling their money and pumping it behind the dollar. In fact, the war in Ukraine is also one of the major reasons why we are seeing the rush towards the dollar, which is in fact impacting India, and we are seeing the drop in the rupee, which now stands at close to 80 per dollar.
So why is the rupee falling so rapidly? The primary reason is hike in interest rates in the US, making it a more attractive investment for institutional investors all over the world. These FIIs have withdrawn massive amounts of money from the Indian equity and other markets and invested them in the US, boosting the dollar against all other world currencies. The war in Ukraine has also fed to an overall uncertainty driving investors towards the dollar. Last year, FIIs withdrew more than 91,000 crore rupees from India, and this year, the withdrawals have zoomed to more than 2,26,000 crore rupees. However, the Indian currency is still better off than many others across the world. This year alone, the dollar has strengthened 20% against the Japanese yen, 13% against the British pound, 11% against the euro, 7% against the Chinese yuan versus 7% against the Indian rupee. Indian industry honchos also tweeted about the rupee, with top banker Uday Kotak commenting on the power of the US dollar. Anand Mahindra also put in his bit by saying that even as US influence declines globally, the dollar was still the currency of safety. Meanwhile, it is the Indian consumer who will face the brunt of a depreciating rupee. A weaker rupee massively pushes up the bill for imported crude oil, with India imposing 85% of its total needs. This puts pressure on the government to raise fuel prices, something it has been avoiding till now at the expense of its fiscal health. Bureau Report, Business Today Television.